Hey everyone, and welcome back to the Vantage Report. I'm AJ Hazzi, and if you're new to the channel, I make these videos to help you make sense of a constantly changing real estate market. You see, we're long on sound bites and data and info, but we seem to be short on actionable intel that we can use to guide ourselves in making quality decisions on real estate. Exactly 1 year ago, I called the peak of the market. All of the market drivers, the market influencers, and the stats that I was tracking on a weekly basis began to reveal to me that our market had run out of gas. So March of 22 was the peak of that runaway post-pandemic market that we had. And following that, we have seen the fastest decrease in real estate prices since the global financial crisis. Now, I remember that crisis well because I actually opened Vantage West in April of 2008, right as the market peaked the last time. So today, I've got some interesting intel to share with you, and it might contradict some of the things you're going to hear in the media, and that's because statistics can be presented in different ways depending on the context or the narrative that someone's trying to push. And we all know that media runs on attention, and nothing grabs attention more than a big red arrow pointing down. And of course, we're 12 months from the peak now, so the year-over-year stats are going to be the most dramatic. But don't be fooled by the clickbait. The real story and the real trend is about how all of the macroeconomic factors are pointing to a story that is much less grim. So let's dive into the data. As of March 24th, sales are down 50% year over year, while at the same time, inventory is up 70%. What that means is that the months of inventory or the absorption rate is actually changed by 600%, and that is a massive difference year over year. In February of 2022, for example, we only had 1.6 months of inventory, so the setup going into that spring was very, very tight. Whereas this year in February, we had 11 months of inventory, so a major difference. Also, this year, houses are taking nearly twice as long, selling in 63 days on average versus last year's 35. And the big story is in the discounting. This year, we're seeing roughly about 4% in the average negotiation, whereas this time last year, buyers were paying 102% of list price, so a pretty big swing in the average negotiation as well. Now, single-family homes are the biggest headline. They're 17% off of the market peak. But worse yet, it's the total sales volume being down that we're feeling in the economy right now. With $1.4 billion trading hands this time last year, there was a lot of money circulating. Now we're down at 600 million, which means there's a lot less money trading hands going into the products and the services that surround the real estate ecosystem. So again, compared to last year, it all sounds very bleak, but that's not the story here. If you zoom in and you watch the trend month over month, you'll see we've reached another inflection point. For example, for the first time in a year, we're actually seeing the absorption rate come back down towards a balanced market. It actually peaked at 14 months back in January and then came back through 11 months in February, and we're now right around 6 months worth of inventory, which is a balanced market. So we've seen 371 sales in the last 4 weeks, which is actually half of the total sales that have happened in the first quarter of this year. Now, dividing that into the available inventory of about 2,200, you can see we're just shy of 6 months worth of inventory if this sales continue, and we expect it will obviously continue to ramp up. Inventory is coming on as we go into the spring. It's climbing, but we're finding that the demand is actually climbing a little faster than the supply. Anecdotally, when I'm talking with our agents at the office, I'm hearing story after story of our buyers getting back into multiple offer situations and competing for the good homes on the market. And the data reflects that as well. We're seeing days on market for the first time has actually come down a couple of days. We're seeing that the average discount is shifting the other way. Now, these are subtle changes. These are not massive changes, but what they do mark is that we've reached the inflection point. The pendulum has really hit the bottom and is going to start coming back the other way. Now, if you take a real macro view, here's a graph of all the G10 countries and how they've fared since the peak of the market. You can see Canada at the bottom, second only to New Zealand for feeling the most pain since the peak. Now, if I compare this to the last crisis that we went through back in 2008, you'll see that the graph kind of sets up very similarly. It took about 10 months of total freefall from the peak before the floor was hit, before the market found support at a new price. And so just like 10 months from peak back in 2008, we saw in early 2009, the market began to stabilize. Similarly, we're seeing that same stabilization happening now, even though an even more dramatic rise and fall during this crisis, we're seeing things stabilize again. So I really believe we've found the floor and we've reached an inflection point. Now, I'm not saying I'm super bullish on real estate prices again. What I am saying is that I think we've felt the pain that we were going to feel, and that we'll likely trade sideways for a little bit longer. The market does have to complete its entire cycle. You know, it booms, it slumps, and then it has to go through a recovery period. Anyone who's been on my channel before has probably seen our real estate clock. I love to know what time it is when it comes to real estate. And so we know we came through a massive boom. We know when we entered the slump because we can see it in the rearview mirror. And now we're entering into that third phase or third trimester of the slump, if you will, as we approach the bottom of the market, or maybe we've even hit the bottom of the market or the trough now. And so I'd like to think we're right around 6 o'clock on the clock, which means this is the best buying opportunity. So if you're a buyer and you've been sitting on the sidelines waiting for the bottom of the market, well, kudos to you. You've actually done quite well being on the sidelines for the last year. But now it's starting to shape up like time is no longer your friend. We're seeing the discounting shrinking, as I mentioned. We're seeing more competition on listings. I think now's the time to get in. And if I did, I would likely grab a variable rate mortgage because it looks to me like mortgage rates are going to come down. You've got RBC economists predicting that the rates will fall towards the end of this year and into next year. And if you look at an 80-year horizon of interest rates, you'll see that every boom and bust cycle corresponds with a massive increase in interest rates and then a very quick retraction from the central bankers as they go back into a quantitative easing space. And we might have got a little bit of help on this time around because of the current banking crisis. You know, the Silicon Valley Bank and the Credit Suisse. This crisis, if you will, has forced the central bankers' hands. They have to backstop all of the deposits, and the only way that they can do that is by increasing the monetary supply. And when they do that, there's only one thing that happens to asset prices. They go up. And we're already seeing it in things like Bitcoin, up 80% year over year. You're seeing gold on a runaway price right now. And so real estate has always been a wonderful store of value during inflationary times. And so unfortunately, they haven't managed to quell inflation, but they are going to have to, their hands are tied, and they're going to have to put cheap credit back into the marketplace in order to stimulate the economy. And so we're going to see that continue to play out over the next year and a half. So I really believe that we've found the bottom of the market, and we're probably entering into that sideways trade period for some time. So what does this all mean to you? Well, if you're thinking about selling, obviously the spring, March, April, May are the best months to sell your home. The great news is with the new supply and demand dynamics, you're no longer forced to underprice your home in order to attract interest. If you price your home properly and get it in great shape before taking it to market, you should be able to garner a great offer in a fairly low amount of time. Now, if you're buying right now, the best move that you can make is the move up move. I've mentioned this a number of times in our videos that if you're sitting on a condo or a townhome for the last few years, maybe that was a stepping stone property for you, well, you're actually in a great position because that property has not been nearly as beaten up by the market as the single family home market, particularly in that 1.2 to 1.5 range. Those homes have come down the most. And so there's a wonderful trade to be had by moving up if you have the financial capability to do so. So there's my take, guys. I think we've called the bottom and we're going to trade sideways. I think the worst of the pain has been felt. Obviously, this doesn't take into consideration any of the many geopolitical issues or black swan events that could happen. We don't exactly know how much pain there is to be felt from just the overall small businesses and economy that's feeling the pain right now. We don't know exactly how much pain there's going to be felt by the increased interest rates that we've had for a while. So that some of that remains to be seen, but all of the current data, all of the market drivers, the influencers, and the data that I can see month over month point to the fact that we are now at the bottom of the market, and you can feel more comfortable getting in and not having to price a bunch of risk and worry that your property values are going to slide. Hope you guys found that super helpful. If you're interested to see what your home might fetch in this newly rebalanced market, you can start that process with our handy new tool right here on the blog. And if you're interested in poking around to see which of the 2,200 active listings might suit your family, you can start that process here on the blog as well. Again, thank you guys so much for watching. I will continue to be your eyes and ears on the market, and we will see if my predictions hold over the coming months. We'll see you guys soon.